What is up, Bat family? Welcome back to the Builder Trader YouTube channel. In this video, we'll be going over our weekly analysis and economic news for the upcoming trading week. This week, we'll be covering the NASDAQ 100, the US 30, gold, silver, and Bitcoin. I know it's been a few weeks since I've last uploaded a video, and it's great to be back and back into the swing of things. So without further ado, let's go ahead and cover the economic news for the week and dive right into things here. So for this upcoming trading week, there is a significant amount of high impact and medium impact news, even though it is at the end of the month. And forgive me here, I have just gotten back from traveling from Thailand, so I still have a little bit of a cold, I want to call it. You know, it was really hot in Thailand, and it's really cold in Seattle, and my body is still trying to adjust a little bit, but bear with me here. Alrighty, so starting off the week, Sunday, right during Asia Open, a few hours in Asia Open, we have Chinese Yuan Manufacturing Purchasing Managers Index, which is high impact news. We have a bank holiday for the Australian dollar, so I wouldn't expect too much in terms of the Australian dollar pairs to be moving. Following that, Monday during New York session, actually during London session, London Open, we have European Central Bank President Lagarde speaking, medium impact news, German IFO business climate, and then later during New York session, we have new home sales for the US dollar, and later that afternoon, we have high impact news for the Swiss franc, which is Swiss National Bank, Switzerland National Bank Chairman Schlegel speaks. So that's interesting. On top of that, Monday is a bank holiday for the Chinese yuan, so there won't be too much for any yuan pairs, which we don't really trade those anyways, but just keep in mind that it is a bank holiday in China. On Tuesday, New York Open, we have core durable good orders for the US dollar and then durable good orders. The only difference is core does not include the data for, pull up, so the core durable goods order excludes transportation items. It just excludes transportation data, so that's the only difference. We have conference board consumer confidence, and then later that afternoon during Asia session, Australian dollar has consumer price index news, which is a high impact news event. And same thing, Tuesday is a bank holiday in China once again. Actually, it's a bank holiday all week long. Must be nice if you work at a bank in China. Should be a paid holiday. I think that's how it works. Or it does in the US at least. That's how it works for me. Alrighty. So on Wednesday, New York Open, during New York session, we have high impact news for the Great British Pound, which is Bank of England Governor Bailey speaking. 30 minutes after that, we have high impact news for the Canadian dollar, which is Bank of Canada Monetary Policy Report and Bank of Canada Rate Statement. Shortly after that, Bank of Canada press conference, and then medium impact news for the US dollar, which is crude oil inventories. Now, the big news later that afternoon is the federal funds rate and FOMC statement. Following that, the FOMC press conference. Expect Wednesday to be a highly volatile day, lots of big moves in the market, and just steer clear of any trades before the news. Just wait 5-10 minutes. I promise you will catch some of the moves still. Just be patient. And a lot of times, weird things happen. It has to take liquidity going either bearish or bullish, and then it goes the direction you think. So just be patient. You will catch that setup if you're trying to trade FOMC. Thursday, high impact news for the euro during New York session. We have main refinancing rate and monetary policy statement for the euro. What is main refinancing rate? Let's see what this is. Short-term interest rates are, what is this? Oh, measures. Interest rate on the main refinancing operations that provide the bulk of liquidity to the banking system. Ah, interesting. Okay. Next, we have USD advanced GDP and unemployment claims 15 minutes after the Euro news. So Thursday is also going to be high impact news during New York Open. Shortly after that, 15 minutes later, we have European Central Bank press conference and then pending home sales. Later that afternoon, during Asia's session, we have Tokyo Core Consumer Price Index for the Japanese yen, JPY pair. So I would expect Asia's session to be pretty volatile on Thursday. That should be plenty of opportunities for New York and Asia session Thursday. Lastly, Friday, we have high impact news for the Canadian dollar, which is Canadian gross domestic product, 5:30 a.m. right before New York Open, and so pre-New York session. And then we have core PCE price index. PCE is, what is PCE again? Personal consumption expenditures. So core information does not include food and energy prices. That's the main difference here. And as you can see, measures changing the price of goods and services purchased by consumers, excluding food and energy. The reason it excludes that data is because food and energy prices are more volatile than the other goods and services that the Personal Consumption Expenditure Price Index measures, in case you all wanted to know. Alrighty, let's go ahead and get into the more interesting stuff here. We have now covered the news. We can see we have a very full week of high impact and medium impact news, mostly during New York session and Asia session this week. Next week is also going to be a new trading month, so it's going to be a similar week in terms of high impact and medium impact news. Basically, expect the same exact type of economic news events next week as well. Both weeks are going to be very volatile, and definitely make yourself available for the opportunities that will be present. Alrighty, first things first, we're going to go ahead and start with gold. Now, we're going to be doing a fresh markup on this, as this markup should be around 2 weeks old and not touched it since. So those that do not have a process or still figuring out what to do to go through analyzing the charts and marking it up with your own technical analysis and levels, this is how you do it. And this process is called top-down analysis, or at least what I used. And this is how I gather what may happen during the week. So the right-hand side, we're going to start with the monthly time frame. We can see that this month has been extremely bullish for gold. We hit a low of 26.15, and it basically rocketed all the way up to where we're at now, at 27.70, where we closed last week. Now we can see that price is most likely going to break above this all-time high here at 27, what was the exact price? 27.90 and 17 cents. Price is going to explode past this point, and we should be seeing the $2,800 price point coming up soon. Now on the right-hand side, I need to clean up some of these levels, as we don't need all of this. Alright, yep, let's clean all this up, get all these markups off, and we will get a clean picture here shortly. Alrighty, I can work with this for now. So the right hand side, as we said, monthly time frame. For those that have been watching my videos, we are going to use that Fibonacci retracement tool to see where price may be headed and what potential price points we'll be looking at for the overall higher time frame trend. So right here, we're going to measure just the monthly time frame. So we hit those targets, these ones here, so we need to adjust this. So once we hit this price point, extend a little further, we need to adjust this sum and move this one to this higher low point. So from low to high, here we are. So this previous 2800 target was based off of when we first measured this from this point to this point, I believe. Wait a minute. There we go, that's better. Okay. On the weekly time frame here, we're going to go from this high low point to this high. Yeah. Okay. So first area we're looking at is 2900 if we can break above the 2800 point. And then beyond that will be 3000. Now many analysts are calling for 3000, even where I work at JP Morgan. The head guy, Greg Shear, recently changed his analysis to say that gold may be headed to 3,000 this year, new all-time high, which I do see it. We're at previous all-time highs. Gold's about to break above it and should continue rallying all through the next few months up to 3K, or at least 2,900 is where we're first looking at. Has to break 2,900 before we get to 3,000. You know, one thing has to happen first before the other thing can happen. So we got our original target for 2800, I believe, from doing this here, this higher low point to this high, and then we were waiting for a higher low point to develop, and this is where we have the first point of 2800, and then as you can see, these extension points line up with 2900, which is our first area beyond 2800 we're looking at. So 2800 in the works. We might see that this week or next week at the start of a brand new trading month. You know, we may have this month close bullish and the next month just absolutely rally up to that break above 2800 and then towards 2900. So we do have these marked off. We're going to make alerts here so I am aware when price hits these points. And right at 2800, 27.99, close enough. Okay, so let's remove that. We can see where price may be headed on the higher time frame based off the weekly and monthly. Now this is where we're going to add some supply and demand levels, look for liquidity, and look at our support and resistance areas. So right here, all-time high, we can see we are very close to it. We have resistance right here. We're going to mark off our previous week's high, which is this point right here. And we're going to change this background to I'll keep it blue. Label this previous week's high. So what else do we have here? Right down here is our previous week's low this wick, so we're going to mark this off and make it PWL. So now that we have our price range for last week, we can see what may happen for this week. So once again, I am going to apply the Fibonacci tool just to measure this previous week's candle. All right, and would you look at that? 2800 Fibonacci extension, or negative 27% Fibonacci extension lines up with the price point of 2800, 2810 area, which is right where our zone is. And that's exactly what we're looking for this week. Price most likely is going to hit this, and after that we'll keep analyzing to see what else we can get into and follow the trend and catch any short-term setups. The zone here at the extreme high, the all-time high, I'm going to change to a black color or dark gray. It's just my preference. I normally use the blue and the dark gray colors, and then green for the overall extension areas. So there we are. All-time high marked, previous high marked, previous low marked, or previous week's high marked, previous week's low marked, and we can see the Fibonacci extensions lining up with our overall target for next week. Now that we have this marked off, let's break it down to a little bit lower time frame, the 12-hour. So we have some short-term support at 2740. You can call it demand or support, whatever you like, but it is there right here. So we're going to mark this off. I'm going to keep it as a zone. I like it like that. I don't want to add a support level in there. So we'll keep it like this. Zoom and a little more. Right hand side going to the 12-hour time frame. So as you can see, this whole area was last week's candle, and we're going to see any potential areas we may be able to take some buys on. Let me zoom back out real quick. Now where that zone lines up with the Fibonacci level as well, right at the 50%. I could see price retracing all the way down to 2740 before giving us a nice bullish setup. So maybe something like this comes down right into here, maybe in 2750 right there. This could be called a fair value gap. And then we see that move up. So for those that don't see it, there is a fair value gap right here, 2750 price range. Price could come down there or go into the extreme area of demand and make a sharp wick rejection and then continue higher. Price most likely is going to open bearish and push lower based on how this candle close is. We can see that this minor level of support is looking to break based off this bearish candle, these bearish candles here. Most likely we'll just open bearish, push down, and then wick reject, and we'll see that bullish move to continue to break the all-time high and continue higher up to 2,900, 2,800, then 2,900, and potentially 3,000. We'll zoom in a little more here on the 2 hour and 1 hour. And yeah, clear bearish candles. Bearish pressure is just going to open down lower. 2755, 2750 could be a good area to start accumulating buy positions. I wouldn't enter with full risk at this price unless you see clear wick rejection. Then you can set your stop loss below the low. But a setup would look like this, or at least this is what I am seeing and what I'll be sending to the group here, to my Telegram channel. And for those that aren't in my free Telegram channel, Bat Signals, the link is in the video description. Feel free to join. I'm sending lots of signals this week, and we're back in the swing of things. But for those who are interested in free trading signals and analysis and motivation and resources, it's free, and the link is in the video description. So here's the setup I'm seeing. This right here, pretty ideal. Maybe stop loss below down here too, depending how you want to set your risk. And we can set a risk reward tool like this as well, just in case it comes down. So this would be the ideal setup that I'm looking for here. Tap down to 2755. You know, this, it could go lower, but this is a pretty fair price and it's in a fair value gap. If it breaks lower, we can see 2740, 2745, 2740. That's also a good price range to add to those positions, or just simply wait to take your first entry and scale in as it goes higher, if it goes higher. So this is what I'm seeing here for gold. Overall, we'll be waiting for these setups. Buy zone 2755 to 2740, that price range, and then should see a strong reaction and should see a strong move up to 2800 to 2820 this week and potentially beyond. So we'll be moving to the next pair now, and I did mention we'll look at silver, so let's just look at silver real quick. I don't have it pulled up, but we'll get her up real quick. All right, so XAG USD, for those that don't know, that is silver's ticker symbol, XAG. For those that don't know, on the periodic table of elements, silver is AG. You know, that's pretty neat how they did that. Gold is AU on the periodic table. Some interesting information in case those that wanted to know. Okay, so silver here, also looking to have a strong rally coming up, and same thing that analyst at JP Morgan, where I work, said the same thing. This guy's in charge of the commodities analysis, but also saying that silver is going to have a record year, and just based on the technical analysis, you can see it. You know, we have an all-time high right here that it made, right, almost at $35, not quite, just shy of it. But silver could potentially go up to $40 just looking at it here if it breaks above that $35 point. So let's mark this up. Let's zoom out some. Alrighty, so let's put that Fibonacci on. gonna do it like this. So we have our low point here, high point, higher low. We almost hit our extension target at $35. So this is where price has not fulfilled its extensions, its Fibonacci extensions. So this is still in the works. This most likely is going what we may see in this upcoming month of January or February. So we have this price projection here, $35. I'm going to set an alert here. Where we're currently at, $30.50, that'd be a $5 move for silver, pretty significant. But let's keep marking this up here. Now if we extend this to where the higher low point is, up to our current higher high point, the next target would be 37 and then $40. So we're still targeting those overall higher time frame levels as I had mentioned. So 40 and 37. 35, 37, 40. Those are going to be the targets for silver. Keep that in mind. Mark them up. Add an alert, whatever you got to do. $35, $37, $40. Those are the targets for silver. So let's zoom out on the weekly time frame. We can see that price is developing to make what appears to be a bullish move higher. We can see a higher low point formed right on this area of support and demand. We came down, retraced, and made a lot of wick rejection to make this higher low point. We can see right here would be our previous week's low. Last week did not have much movement, as this candle looks pretty low volume in terms of the previous weeks that we've had. But let's go ahead and turn this dark gray since we're using blue on our extreme zones. I'm going to mark this as previous week's low, and then same thing at the other end, we'll mark it as previous week's high. Oh. There we go. Perfect. So now let's zoom in, and we're going to change this to split screen. So left hand side 4 hour, right hand side we're on the daily time frame still. So similar to gold, this week might open up bearish, come down to this area of $30, potentially lower, but we have some resistance right here, right at $31. We can see that we have an area of demand right down here, right at the $30 point. Let me fix our previous week's low zone. All right. And then as you can see, we have some demand right here where price rallied from. This whole area could be seen as a fair value gap between here and here. So we may see some type of bearish move down. If we look at the right hand side, you can see it as well. Right, because we see this wick rejection. We did close bullish. Next candle though may open bearish, come down, and we may find some type of footing down here once again, where we can see a bullish move higher. So first target would be $32 price range, 32 and 250, 32, 250. Yeah, this is a really good area to potentially start taking buys in. So this setup I see, the risk reward tool here is going to illustrate that. So we can see this move here, a stop loss below 30. I mean, price could take liquidity, come pretty steep down into this point, break the previous week's low, come down into the 29.80, 29.60 price range down here, and then rally. You know, maybe something steep like that. You know, if we're looking on the right hand side, could see something like that. If this area does hold though, if this area holds, this would be it around the $30.40, $30.20 range. I'm going to set an alert here. 30.20, 30.40, and From that point, if we are able to create a higher low point, which would be very nice, this is a really good setup. We have really good risk to reward on this trade, just targeting the first area at 32 to 32,250. If price does break above that point, as you can see, that's a very clean range, so it's very, very possible. Just a clean move up to 32, and then beyond there is another clear range up to 35, and then above the all-time high is where we have our overall projection targets of 37 and 40. So this is what we're seeing here. Overall continuation. We could see liquidity be swept and taken down below $30 and then a rally higher. But for now, we'll be looking at this overall setup here between 30.40, 30.20, and this is where I see just the buy setup at. If it does break below, we'll keep watching. So I'll set an alert at $30 just in case price goes to that point, and then we'll reanalyze and most likely be able to execute on the liquidity sweep, or at least when price comes back up to this point here, just execute in line with our previous trade idea. So that's it for silver. Bullish, targeting 35, 37, and $40. All right, next we'll be looking at the NASDAQ 100 and then the US 30. So first, NASDAQ 100. Now this is one of my favorite pairs. That's pretty clean, and I just get it and it gets me, and I just really enjoy trading and analyzing the NASDAQ. NASDAQ is approaching all-time highs once again. It's been having a very volatile period, due to the election, and also just it's been providing a lot of good setups, based on the technicals and the areas that price has been going to. So let's clean this up. It's been, like I said, 3 weeks since I last analyzed, so let's take care of this. So right here is going to be our previous week's high. Yep, already got that. Right down here is going to be a previous week's low, so let's take care of that. Oh. All right, PWL. Our all-time high marked. Let's go ahead and clear this text. This is just support now. As you can see, there's a lot of minor technicals I have on here in areas of supply and demand that are just based off of the intraday time frame, like the 4-hour and 12-hour time frames, even 2-hour. Okay, so we're getting this cleaned up. Okay, this is starting to look a lot better now. Don't like that there. I don't really like this here. Alrighty, so we have everything marked off. On the left-hand side, on the weekly, we're going to use that Fibonacci retracement tool again. Our overall previous projections were 22,800 to 23,000 price point for the NASDAQ, which is still in the works. Let's go ahead and measure this move here that we're seeing. So right here, our low point to our high point, where we first broke above. Okay. Actually, let's go back a little bit. I believe this is where I first put the projection here, low to high. We hit that, so then we would need to move this up to this point, and then extend it up to here. Okay. So this is where how I originally got that first projection level right here at the 22,800 to 23,000 price point. As you can see, we hit this first area, 21,726, where we made that first all-time high. Now price is revisiting that point again. And as you can see, we closed strong bullish candle. Most likely next week we'll see a minor pullback right into this price point again, where the support is, where that extension level, the negative 27% is at 21,726. Slight pullback next week, break above the all-time high, and we should see a very strong move up to 23,000. Now let's look at these next projection levels that we're looking at. we could be seeing 28,000 and 28,900, but that's all the way up here. There are targets that may be achieved a lot sooner. So let's go ahead and find that. To do so, we will be moving the Fibonacci tool once again from the low to the high point that was made. And as you can see, we have 24,400 price range. So 24,000, 24,400, this whole area right here is our next target beyond 23,000. So we'll be looking for that as well. Let's set an alert at right below 24. We'll set an alert right at 22,850. It's close enough. And we'll set an alert right at the all-time high when that is broken, because we want to be alert of that and be aware of that. Most likely when that breaks, it's just going to be clean bullish volume. You could probably just easily take a buy and it'll be a clean move up to your take profit. Probably one of the easiest trades you could take. Let's zoom out and go to the 12-hour right-hand side, go into the weekly. So in between these two zones, this price action up to this high is what happened during last week. So let's zoom in a little more, 4-hour time frame. Perfect. So we can see equal highs here. We have a little reaction from this minor support, which is where that negative 27% projection was at. This next weekly candle, most likely I could see it retracing down to right here, tapping, and then absolutely taking off. If it doesn't pull back that far, we may see a bullish candle forming right on this area right here. But overall, I think we will get a little bit of a bearish pullback before we can, giving us an opportunity to execute on that buy before it takes off. Now, if it doesn't pull back, you can buy on the break of the previous week's high. You may have to have a bit of a wider stop loss, towards the previous week's low. So if this is what I'm seeing here, we'll add the risk reward tool here and stop loss like this. This is a 2-to-1 risk reward. This is a really good setup just based on how it is currently. If you were to refine your entry and catch the low point, you could maybe make it a bit more lucrative for yourself and have less risk, or a tighter stop loss with potentially more risk on the trade. But this is what we're seeing here, this potential setup. This lines up with our overall higher time frame analysis, and yeah, this is pretty clean. Ultimately, probably going to call this week, and this might be one of our good winning trades for us. So an alert there. We'll go ahead and save the chart. But yeah, for NASDAQ, bullish overall target 22,800, 23,000, and then for the upcoming month, probably 24,000 and higher. All right, next pair, US 30. So US 30, also, actually it's been a little while since I looked at this pair. Let's see what's going on. So left-hand side, weekly time frame. Right-hand side, monthly time frame. We are very, very zoomed in, so let's zoom out. All right, perfect. We have way too many levels here, so let's clean this up. There we go. All right. So here's our previous week's low right here. And we're going to mark off our previous week's high, which is right here, where we hit this zone and resistance. We have our all-time high here, right at 45,100. Let's extend that and change this to a dark gray color. Perfect. Now our overall extension level, which is this blue area here, we're going to turn to green. Excellent. All right. So as you can see, the US 30 is rallying towards the previous all-time highs and looking to break above that and We can see where it potentially may go based on the higher time frame trend. Same thing, Fibonacci retracement tool, and we're going to measure from this monthly low to this monthly high right here, the first one. So you can see we achieved the first target. Next target is 45,927, or 46,000 if you want to call it that. It's close enough. So we'll set an alert at 46,000, right below 46,000. That way we are aware if price hits. Next potential areas are going to be up here, but let's adjust this some. All right, so low to high, made a new high point. Need to adjust our Fibonacci level here to a new low point. So next target, 48,200. So 46,000, 46,500, then 48,000 price range is in the works for US 30. As you can see here, this is all based off of the higher time frame Fibonacci retracement tool, and you can use the projection levels to see where the overall trend may be headed. So we have these marked off now. On the weekly time frame, you can see strong bearish pressure. We have our previous week's high, previous week's low. There's a clean range similar to how the NASDAQ just looked. And there's also a clean range to the upside. There is not much else to really say other than this is very, very bullish. You know, this is screaming buys, and this is looking like a great opportunity to be a part of. So let's make these a little bit shorter. We'll zoom into the 12-hour time frame, and right-hand side go into the weekly time frame. 12-hour, we can see a bearish candle formed, but overall support may form on this area, or we could see a bit of a pullback down to maybe 44,000 right in this area before taking off higher. Let's go a little bit closer on the 4-hour time frame right here. There's a minor area of support. You could call this maybe even a fair value gap if you wanted. But there's something right here. Support, minor support. There is something here though. This is where the bulls had to overcome the bears, and price may come to retest because there's a lot of liquidity right here. A lot of people thinking that price would reverse from this point, and that were pretty extended, and then all it did was just bam, clean bullish move higher. Just took liquidity, took all these sellers out who sold right here thinking this is the top. Would have been an easy buy. Pushed for, let's see how much this one candle moved for. That one candle moved for 400, nearly 420 points. So that was quite significant. But as you can see, we have liquidity here though, and price most likely is going to come back to retest this point, and that's where we probably take the buys from. So here is the setup I'm seeing, risk to reward tool right here. If we just target the all-time high, this is a 2-to-1 risk to reward with a pretty wide stop loss. If you wanted to wait and see the wick rejection here before buying, you could, make a tight stop loss if you wanted and increase your risk to reward drastically. Now real quick, we can apply the Fibonacci to the weekly candle just to see where price could end up. So that area we're looking to take the buys from would be a 38.2 retracement. That could be where you may get in on at, price most likely has a strong probability of reacting from this area and continuing higher. If we see a steeper retracement, then we have a zone right here that we can clearly see. This would be actually more of a true fair value gap than this. This would be more of a area of liquidity where buyers overcame the sellers. This area would be more of a steeper retracement down to a fair value gap. So we could see 43,800 for the US 30 down to 43,600. But I'm more confident on this area to take the buys from. But if we have to adapt the trade setup, then we know where our extreme zone is and can easily re-execute at the same risk or greater risk and get potentially a better risk reward out of the overall move that we're seeing. But with that Fibonacci retracement level, as you saw, the first target was at this point right in the area of supply for where the previous all-time high is. So 44,900 would be a good point to take some profits or close the trade entirely if that's how you trade. If that's how you manage your trades. Let me place that one more time. It's just from here to here, just like that. As you can see, if we break above this week, the all-time high, then 45,300 to 45,500 is most likely what we'll see. So we'll save that. Overall, US 30 bullish. We are targeting 44,900 and 45,500 this week. We could see a potential pullback, which that's what we're planning to execute on, and overall just bullish movements higher to possibly make a new all-time high. Last pair of the day is going to be Bitcoin. Now, these previous analyses I've given have been quite intensive, so this one I am just going to go over pretty briefly as I don't intend to trade this pair this week. We can see Bitcoin has been very volatile, and why is this locked? Yes, removed. Okay. It's been very volatile and took quite some time to finally get to this point to break above the 100K level, and then we pop above the all-time high, and then we're going to continue up higher to 115, 120,000 here soon. It's in the works. It just took a little while, but currently price is consolidating, as you can see in this tight little range here, and looking to extend higher. So maybe something like this, or based on how it looks with very low volume, choppy volume, we may see just a clean bullish candle straight to the upside, trapping the sellers in here. But after this point, once price popped above 100,000 up to 102,000, this is the point where many people, including myself, are thinking Bitcoin's going to create this move that we're seeing right now. But after that, there was just a big sell-off to take liquidity, essentially. And that's all that was. Like, quite literally, that is what that was. Like, this candle here, right here, looks like an established higher low point based on the daily time frame. We had some consolidation. And then, boom, took liquidity. They forced it down below 90K. Yeah, it went to $89,698. They literally manipulated the price, shoved it down here, faked a lot of people out, got a lot of sellers in, and now it just absolutely rallied and moved in line with exactly how everyone was thinking right here back in January 7th, including myself. Okay, now this does happen, and this is where trade management and managing your risk comes into trading, and that's what's most important. But overall, if you were taken out, you could have re-executed at the lower price or even at the same point you originally executed and went along with the same analysis you were seeing. But after that point, after it took liquidity, you can see there was a strong move up, created a higher low point, retested this area here, and is now on target to reach first 110,000, which most likely it's going to be a breeze to hit that. We can see that happening now, and then next 120,000. Beyond that point is a much longer period of time in order to hit these higher targets, but as we know, Bitcoin is finite. It only has 21 million coins, and it's only just going to keep climbing higher. So next potential targets, if we break above those areas, let's adjust this here to here. We have 133,000 in the books, and then 150,000 coming up. And then maybe years from now, 5 years, maybe even 10, I don't know how long, but 250K is in the works. It's there. It's going to happen. It's just a matter of time. And that's really what it is, time. I don't know how long, but I can see it, and it will happen. Just a matter of time. But in the short term, we have 110, 120,000, and then 130 to 150,000 coming. So Bitcoin, bullish, overall targeting 110, 120,000 in the short term, and long term, 130 to 150,000. That's all I have for you guys this week. Appreciate you all watching and tuning in. It was great to be back and getting in the swing of things. Hope you enjoy the analysis and are prepared for the week. I know I am. It was great to be back on the charts and really get back to it. Now again, if you have not joined my free Telegram channel, feel free to do so. It's literally free. The link is in the video description, and I'm going to be sending multiple signals this week, send you guys updated analysis nearly every day, and help keep you all motivated. I am a really good resource to use. Utilize me. I am licensed, as I've already stated. If you haven't watched my previous video and are interested in getting your financial licenses, it's right here. Go ahead and click it. Thanks again for tuning in, and I'll see you guys again soon. Follow me on Instagram. Have a great weekend. Peace.